So my name is Steffen Löbner. I am an environmental markets expert at European Energy Exchange and working in the business development team of EEX. And I'm following carbon markets already since 2010, so more than 10 years already. And today I will give you an overview about EEX's offering in carbon markets, where we are coming from, especially also looking at the compliance markets here in Europe as well. And I also will give an update on our plans in the voluntary carbon markets and what we have already done there over the last couple of months. So this slide gives an overview about our markets, our activities in the carbon space we are active in. So we have introduced already secondary markets in the ETS in 2005, long time ago. And they have therefore a strong foothold in the ETS. So in 2017, a while later, we have expanded also to North America. There we have bought nodal exchange, originally coming from the US power market. And together with partners there, we have launched various North American environmental contracts in 2018. This is including, for instance, California and RGGI cap and trade schemes, also REX markets and renewable energy fuel standards. So Nodal just recently announced that they are also offering or plan to offering Washington carbon allowances futures from December onwards. So please watch our notifications. So in 2021, we started to cooperate also with the New Zealand exchange, as we have a strong experience in auctions. So we are providing to them the auction platform and also provided to them consultancy services for the setup and operation of the auctions. In 2021, also we launched a market for the national sectoral ETS in Germany, just a local one really. This task was also awarded to us through a tender like the auctions. And there we operate a sell-off platform for the German market. And this will also later be transferred to a traded market, also with auctions. And we hope also a secondary market here. Yeah. So, and over the last couple of years, we have been in talks with many players from all over the globe who are interested in setting up carbon markets and developing products and exchanges. And there we are in touch, for instance, here also with players from China, because China will probably be one of the biggest markets in the futures, but also Kazakhstan, for instance, here. Yeah. And this year we officially started to enter the voluntary carbon space. So here our parent company, Deutsche Börse, where we belong to, invested in the ACX, who's on the call as well, where we will tell a bit more about the exchange later on. And we have also partnered with NZM, a spin-off of Retro Advisors, to list a special contract, the GR. Yeah, and also we have introduced a number of future products available on our EEX Group's nodal exchange in the States. And yeah, we also plan to expand the offering further. So let's speak a bit more about compliance markets, EETS here. So what is the offering there? So in the EETS, we're active already since 2005. We operate there a primary and a secondary market for EU allowances and aviation allowances here, special for the aviation industry. And there we have the standard products of sports, futures and options, as well as the related spreads to operate all the famous carry trades and what is needed here. And there in the secondary market, you can secure your carbon price risk up to 9 years ahead by using futures. Yeah. So to deal with the high volatility in the market and to lock in your profits, for instance, if you're a power industry player here. So all contracts are physically delivered by our clearinghouse directly. So there's nobody else involved, and the service is also free of charge. So and we have all major financial and physical players active at EEX, as we're also coming from the power market. Especially all the bigger incumbents from the power market are also active here. Yeah. Also, we are working together with all the major brokers here to connect Euro bilateral deals with the clearinghouse, and we offer different technology options here. What is known and famous in the trading space, the trading environment here. So while after Brexit here, we are still planning to introduce UKDS products. We are waiting for regulatory approval, but hope to introduce products here also soon. Yeah. Quick look on the primary market. So we are operating large-scale primary auctions since 2010. There we have started with first primary auctions for the government of Germany. This was still in the second trading period of the EEX. Then 2012, we were selected as the common auction platform for the European Union. Poland and Germany also operate separate platforms, but on the same framework, same regulatory framework, and also technically the same structure, look and feel. And both Germany and Poland also selected to auction through EEX. And after Brexit, we also auction a small share for Northern Ireland here, just a remainder, so to say. Yeah. And so after Brexit, basically all of the EEX auction volumes, primary volumes, are monetized through EEX. This is really a special case here. So we are one of the biggest players here on the globe for primary auctions. So now coming from compliance markets to voluntary markets. So compliance markets are driven by binding reduction targets coming from politicians, yeah, and the voluntary market is fully driven by private standards, private initiatives here, yeah, and those standards, yeah, there are different projects, activities developed here, and there are different types of carbon credits with different qualities, different certificates, locations, and so on. And the carbon credits can be grouped basically in two categories. So you have one, the reductions, and one, the removals. Reductions are reducing the emissions from existing sources. Removals are taking the emissions from the atmosphere. And but basically the design of all credits are similar, same size, 1 ton of CO2 usually. They have a serial number. They are stored in a registry. There are different registries. And there are also the boundaries between compliance markets and voluntary markets are blurring here. For instance, in the California market, also offsets are used. In the European market, it's discussed, and Corsia, for instance, also interested in or using voluntary markets here. Yeah. So VCX, we operate an exchange, and our aim is to standardize markets, to make it simple. Yeah. And we heard from many players that the voluntary carbon markets is rather complex, and it's also highly fragmented. Yeah. And here on this chart, you can see there are different standards, more than 20 independent standards with 12 methodologies here, sub-methodologies, and over 700 methodologies, and many projects. Yeah. So it's really difficult here, if you're a newbie to the market, which one is the right one to choose. Yeah. And our vision here, our task as an exchange is to structure the market and to provide easy framework for market participants to get active here. Yeah, and this is what we are doing. But at the same time, next to standardization, it's also necessary to keep a bit of differentiation as much as needed. So I mentioned before, we have to differentiate between reduction and removal credits, and as well, both are distinguishing as well nature-based and technology-based projects, each of both. Yeah, and there's a consensus here that in the long term, removals should be preferred over reductions because, of course, we would like to reduce the emissions that are polluting the atmosphere. Yeah, and therefore, in the long term, removals could be or should be the ideal credit here to be used. Yeah, not in the case because of the liquidity. Yeah. So what is our approach as a group here? We offer different contracts at our group exchange with different underlyings here, so for reductions and for removals. And here we are following also existing standards. So we have here the CORSIA standard, and this is a carbon reduction and offsetting scheme introduced by the International Civil Aviation Organization, ICAO, a while ago. Then it's also a consensus to invest into nature-based credits here. Therefore, we offer nature-based solutions here. And there we have also special contracts, yeah, that are first of its kind contracts. Here we have a carbon removal contract. This is more future innovative driven, I would say. And here, in the second one, here the GR future, together with NZM. And this is a mix, a basket of carbon credits, including also a high share of permanent certificates, which will support the long pathway to net zero by 2050. This is the idea behind here. And what is also special here, we are also offering trading instruments here for options here based on the futures, the respective for CORSIA and nature-based contracts that can also be traded on the exchange. Yeah. So yeah, and then the last slide, we'll give you a short overview about the different contracts, more a little bit like contract specs, explaining the underlying. So CORSIA, nature-based removals, and the GR. Then the different registries we are supporting here. Yeah. So it's a wide range of registries that are supported by EEX, and the different climate goals here targeted by the different contracts. Yeah. And yeah, I guess if you have any questions, we can discuss them later in the discussion. And at this point, I would like to hand over to Wei Mei. And thank you very much for your attention.
Thanks, Steffen, for that very comprehensive overview of the products listed over in EEX. Also wanted to mention that there will be some overlap between the products offered at EEX and AirCarbon Exchange, given the partnership between our two exchanges. So please bear with me while I start sharing my screen. I'll try to keep talking so that you have something to occupy you as I figure this out. I'm Wei Mei, and I'm actually the head of APAC for AirCarbon Exchange. I'm also head of product for AirCarbon Exchange. And my topic today is I'm actually talking about what's happening in the Asia Pacific, specifically in regard to the carbon markets. One of the reasons is because the APAC region is quite a bit different from Europe, where they have the European trading scheme. And in Asia, we don't quite have something as harmonized and as united as that. But here's a quick overview of AirCarbon Exchange. We have transacted over 17 million tons of carbon credits since March of last year. Currently, we have over 150 members from across 30 countries. We have a pretty long line of clients who are currently going through KYC and AML. So if you're interested in trading on exchange, please let us know. At AirCarbon Exchange, we are the top-ranked carbon exchange for 2 years in a row, according to Environmental Finance. Also, we're building partnerships with the various carbon crediting standards and registries in the world. Right now, we are the sole Asian exchange with a partnership with the United Nations. We offer credits from top-ranked standards. That is Vera as well as Gold Standard. And just this morning, we put out a press release on our partnership with ACR, the American Carbon Registry. So we offer credits from these registries. They are, of course, the top-ranked registries, very well regarded in the world. And yeah, so that I've gone through, and I'm actually going to jump right into the Asia Pacific carbon markets. So as I mentioned, unlike what you see in Europe in the EU ETS, what you see in Asia Pacific is more of a patchwork of approaches towards carbon pricing. So I use the phrase carbon pricing because a whole bunch of mechanisms fall under it. Carbon pricing can be either a carbon tax, or it can be in the form of a cap and trade or a full-on emissions trading scheme. So a lot of what we have seen so far in the Asia Pacific region are carbon taxes, and what's happening in regions where you have carbon taxes is they're actually imposing a carbon tax on certain fixed installations which produce carbon emissions, and they're allowing for some portion of that tax to be paid for using carbon credits. Meaning, if you had if you're emitting around 100 tons of our carbon every year, and they say 5% of that can be offset using carbon credits. That means you can buy 5 tons worth of carbon credits, and instead of paying tax on that 5 tons, you can just submit a carbon credit. So if your carbon credit, the price of your carbon credit happens to be below the price of the tax, then hey, you had some upside from that. So that's the idea behind these carbon taxes with some emission of carbon credits under that scheme. In the APAC region, you also see a lot of domestic emissions trading schemes. Some of them are purely domestic. Some of them actually admit carbon credits from various sources. And in the next slide, I'm actually going to show you an overview of all the carbon pricing mechanisms. Well, not all, most of the carbon pricing mechanisms in the APAC region. And we'll run through a couple of them one at a time. Not in detail though, because we have a bit of a time limit. Also, the peculiarities and idiosyncrasies of each of the schemes probably needs to be investigated by traders further. Yeah, and then I also wanted to talk about participation in the international voluntary carbon markets. Asia is actually a huge supplier of carbon credits to the voluntary carbon markets. And that's where a lot of the projects are being developed, and you see a lot of supply coming out of the Asia Pacific region. And very naturally, you also see a lot more corporates getting in on the action and starting to buy either for their own ESG reasons or actually getting interested because they want to trade the credits. But yeah, so let's take a look at Asia Pacific carbon markets. So it's a whole bunch of them. This actually comes from S&P Commodity Insights, but I'm showing it to you because I think it's a pretty good summary. My value add is I've made little boxes here about things I wanted to highlight. So here's an overview of the different schemes that we have in the Asia Pac. You have New Zealand, of course, and that's kind of a domestic trading scheme that they have, and they have their own carbon credits within that scheme. You have Australia with something similar. Interesting thing about them is you can actually, aside from using the domestic Australian credits, which are generated domestically, you can also use some voluntary carbon credits, which come from Gold Standard, Vera, as well as CERs. CERs are actually the carbon credits which are held within the UN system. So you can actually use these credits within the Australian system, but there are actually some requirements around which kinds you're allowed to use. So here I'm not going into a lot of detail. So the requirements around these carbon credits, for example, for CERs, I think within the Australian scheme, they will accept only CERs from a vintage of 2013 and beyond. Yeah, so there might be some other requirements, but if you're trading in the Australian system, I encourage you to actually investigate the requirements for that particular scheme on your own. Because there will be certain fine detail that you might want to find out about. In China, of course, you have like the emissions trading scheme that's about to be launched. Some fits and starts over there. They have 9 exchanges which are actually trading carbon. The interesting thing about China's system is that they actually produce something called the China Certified Emission Reduction. That's actually a carbon credit produced within China. It's called CCER. And the really interesting thing about it is that it's actually CORSIA eligible. And CORSIA eligibility refers to the carbon offsetting scheme, which applies to airlines, civilian airlines. I mean, so people like Cathay Pacific, SIA, so on and so forth. So airlines are able to use a particular grade of carbon credits called CORSIA eligible credits. So that grade of credits specifies the vintage as well as the type of carbon credits that can be used by airlines. China has one of the registries that qualifies under the CORSIA scheme. So if you're able to actually get your hands on CCERs, you might actually, like an airline could conceivably use some of those credits against some of their initial requirements or like under the CORSIA scheme in ICAO. So the other item that we have is, of course, there's Japan. Japan also has a carbon emissions trading scheme. They actually trade something called J credits, which are domestic carbon credits within Japan. But the interesting thing about Japan, which is actually not featured here, is that they also have another scheme called the JCM mechanism. That's where Japanese companies, and that's actually a scheme where Japanese companies go overseas and they potentially develop carbon credits in certain countries. And this is a bilateral mechanism which allows Japan to create carbon credits and bring those carbon credits from overseas and then bring it back to Japan. And then Japan can actually use the JCM credits against their nationally determined contributions, which is their pledge to the UNFCCC. So that's actually kind of interesting that they have a domestic version of the credits, but they also have a more international bilateral version of the credits. And they've actually just signed an agreement, I think, with Uzbekistan, I think the 24th country to sign such an agreement with Japan under the JCM mechanism. So Japan is basically building its own pipeline of international carbon credits, which you can use under the Paris Accords. Thailand has its own domestic scheme where it issues Thai voluntary emission reduction credits, and they recently signed agreements, I think, with Vera and Gold Standard to sort of partner up to increase the visibility of the Thai credits. And then you also have the South Korean system. South Korea has its own emissions trading scheme. I suppose one of the more interesting aspects of South Korea is that depending on the projects that are developed overseas, they can actually be converted or approved for conversion into Korea offset credits. So if you have a credit or a project that has been developed overseas, it has some investment by some Korean entities, some of these projects can actually, these credits can be brought back to Korea. And then the Korean government, and I believe it's the Ministry of Environment, that actually gives approval for these credits to be converted from regular CERs or international voluntary credits, and then you convert them from normal credits into Korea eligible credits. So it's just kind of like they take those credits or CERs, they retire them within the UN registry system, and then they get converted into, or basically reincarnated, it's the same credit, just reincarnated in the Korean scheme. So that's another interesting mechanism. So I'm just taking you through very quickly and giving you a flavor of the different kinds of schemes that are available actually in the Asia Pacific region. As I mentioned, it's a bit of a patchwork. There are various modalities for emitting carbon credits into various schemes. Some of them admit international credits into their schemes. Some of them are pushing credits out from their country out into the international markets. So it's a bit of a patchwork. They need to be reviewed and understood independently. So if you're trading in any of these individual markets, I encourage you to read up on those markets specifically and understand what's really required. So that's how you would get access to them. Singapore also has a carbon tax, and they're actually going to allow for high quality carbon credits from the voluntary schemes into the Singapore carbon tax scheme. So mainly a small percentage of your tax can be actually paid for or offset by international high quality carbon credits. So I'm just going to go into the Singapore carbon tax a little bit more because where AirCarbon headquarters in Asia is in Singapore, and there might be quite a few people who are interested in what's happening in Singapore. So Singapore is the first country in Southeast Asia to introduce a carbon price or a carbon tax. So this affects facilities producing 25,000 tons or more a year. Right now, the tax is at $5. But there's going to be increases in the tax pretty soon. And here is the schedule that the government has announced because they want to give certainty to businesses so you know what to expect. So these emitters will be able to use carbon credits sourced from the voluntary markets to offset up to 5% of their taxable emissions. We just wanted to highlight at this point that exactly what grade of these so-called international carbon credits, exactly what grade and actually what the specifications are not fully out yet. So I think the government is in consultation and they will actually make known what all the specific requirements are in due course. Also, here is more stuff that comes out of Asia. India is going to have a national carbon market, so is Indonesia. In regards to Indonesia, I think a lot of people have heard that a moratorium on issuance of voluntary carbon credits at Vera was imposed. You know, I suppose maybe it set off some alarm bells among some people who wondered what was going to happen. But quite clearly what Indonesia intends to do, and quite rightly so, I think, is I think they intend to administer the carbon trading in Indonesia and beyond a little bit better. So it's going to be administered by the government, or they're just figuring out their policies and approach in relation to the carbon credits. So it's not that it's not a blanket no, which some people thought was the case. It's clearly not that. What they're trying to do is to manage the process. So that's, I returned to this slide because I just wanted to give everybody a bit of a roadmap as to where we are. So if you're trading carbon in Asia Pacific, you might have to find out exactly what's going on in each of the domestic schemes. However, we do want to highlight as well that if you are in Asia and you want to participate in the international voluntary carbon markets, that's definitely possible. So what you would be trading would be the voluntary carbon credits from a Vera or Gold Standard. And that's what we offer at AirCarbon Exchange. As Steffen observed at the beginning of his presentation, AirCarbon Exchange is basically focused on the voluntary aspects of carbon credits currently. So here on AirCarbon Exchange, just a bit of an introduction. At AirCarbon Exchange, there are different ways to buy and access these voluntary carbon credits. There's an auctions process as well. These are for project developers. They may be issuing carbon credits from projects for the very first time. They want to do some price discovery. And what they do is when credits come to the primary market, an auction is held. So we do this for a lot of project developers who are in the region and actually offering credits from their projects for the first time. The Carbon Market Board in AirCarbon Exchange is where people list their credits on a per project basis. So you can search through, if you're looking for something very specific, you can buy on a per project basis, maybe Indonesian credits or like a Cambodian credits with a specific vintage, or maybe they need to be for mangoes. You can pick and choose specifically what you want using the Carbon Markets Board. Carbon Finder is basically just a filter, a facility, so it makes the search easier. The spot exchange, on the other hand, is where carbon credits trade based on their grade. So an example which I used just now was CORSIA. CORSIA is you can call it or understand it as a sort of an airline grade of carbon credits. So it conforms to a certain specification and requirements. And you can just come to AirCarbon and trade that grade. The reason for that is, as Steffen also mentioned, our job as an exchange is to structure the carbon markets in a way that is easy for the market to access carbon credits. So on the spot exchange, all the credits are basically pre-graded. So if you're an airline looking for the airline grade, you can come in and trade that grade of carbon credits very rapidly. And you can be assured that those carbon credits meet your grades that you require. And the reason is because AirCarbon Exchange actually grades those credits. And we also have a third-party auditor who actually audits the credits to make sure that they make the grade. So there are different grades, as you can imagine, not just CORSIA. So some of the more popular grades on AirCarbon Exchange are the CORSIA eligible token. We call it a token, but basically you can, token and grade are basically interchangeable. You can understand it as a contract or standardized grade. So that's one grade which trades on AirCarbon Exchange. We are a spot market, meaning you can take delivery of the underlying carbon credits. So you can trade the grade and be actually asked for delivery of the carbon credits, and you will get carbon credits, which are all CORSIA eligible if you buy these contracts. Similarly, we also have the Global Nature Token series and the Global Nature Token Plus series. And basically, these are two different grades of nature-based carbon credits. One is more, I suppose, basic grade of nature-based credits. And Global Nature Plus, the plus stands for additional certifications for co-benefits. This is a higher, more premium grade of nature-based carbon credits. There are other standardized contracts which trade on the exchange, such as the Sustainable Development Standardized Contract. That's where carbon credits need to have a lot of SDGs associated with them before they can trade as a grade on our exchange. And that's usually for buyers who have high requirements. They may be applying those credits towards their own company's ESG pledges. So that would be an example of where those credits or that grade of credits would be effective. So we just wanted to introduce to you these concept of different grades of carbon credits and the fact that they're already pre-sorted on the exchanges. And you don't have to worry or buy carbon credits and worry about the grade on your own, because not everybody is equipped to sort and grade carbon credits on their own. And that's my presentation. I would be very happy to take any questions, but I'm going to stop and let Tom take over from a trader's perspective.
Thank you, Wei-Mei, and thank you, Steffen. So my name's Tom Lord. I work at Redshaw Advisors, and we are a company that helps companies across the globe manage and understand their environmental market risk. I apologise if I cough and splutter a little bit today. I'm not feeling 100%, so apologies if I do burst into a bout of coughing. So I was asked here today to give a trader's view of the VCM, and what I'm going to try and do is just explain a little bit about how things trade, and then give a bit of a wish list at the end as to how a trader, I think, would like to see the VCM grow and develop to enable it to flourish and reach the potential that it undoubtedly has. So in terms of the value of a VER, and I noticed some of the questions coming in already are around prices of carbon credits and how you determine the value. The perceived value of a VER is affected by many factors, and one of the reasons we've used the word perceived there is because essentially the value is in the eye of the buyer. Buyers tend to like different projects, they tend to like different characteristics. There isn't one type of carbon credit you can buy in the VCM necessarily. So the things that will affect the price of a VER are the technology of the project, the vintage of the project, the jurisdiction that may come from, the registry or standard that the project is verified by, any additional attributes that there may be, and then it also comes down to personal or company preference. As I say, it's a perceived value, and the type of projects that one company will buy will not necessarily be the type of projects that another company will buy. They may align purchasing decisions with production facilities in certain parts of the world. It may have a link to the product they are creating. But offsetters use a wide variety of projects, and they use them for different reasons. So when we come into how voluntary carbon market credits are traded, there are essentially three options, and much like any commodity market, there is what's called over-the-counter trading, and that is perhaps the simplest form. It's deals between two counterparties who negotiate on all elements of the deal to get a deal done. So they will negotiate on things like volume, price, delivery and settlement dates, and then we'll put in contracts in place to assure delivery and settlement of those credits. There also exist online marketplaces and platforms. These are more like centralized pools of liquidity rather than being a full-blown exchange. They tend to have relatively high transaction costs. Sometimes the delivery options can be limited. They're often spot only. And there's a huge variety of projects, locations, and vintages to choose from. These can be helpful when searching for certain types of credits, or you have a particular demand, or perhaps even an infrequent or low volume demand. Which brings us on to exchange trading, which is essentially the step up from the online marketplaces and platforms. Exchanges introduce standardized contracts. So they will pool certain types of credits together, and Wei-Mei and Steffen have just been covering that a little bit, but essentially those contracts will cover subsets of the market. And what you're looking for is liquidity and trading to develop in those subsets of the market. The exchange will guarantee settlement, which when you are doing high volume transactions at high prices and large values, that is obviously a positive. And they offer standardized terms, so you will know the delivery and the settlement timeframes. They are set by the exchange, and they also offer future trading, so that's crucial to the development of a market, the increase in liquidity, increase in trading volumes, and ability to risk manage. All of those options have positives and negatives. There isn't necessarily a right one. It will depend on what you're trying to achieve, the type of trading you're doing, and the volumes you're looking to trade. As you can see on the chart on the right-hand side, the bilateral and OTC market is still the dominant source of trading by volume. The exchange and platform element is increasing pretty quickly, and could well overtake that in time. But for now, the bilateral OTC element is the larger one. Now, when we start to delve a bit deeper into the exchange or platform traded element, what we actually see is that there's a wide variety of different platforms and exchanges, and we've heard from Wei-Mei and Steffen today from EEX and ACX. Now, there's lots of other platforms too, and they offer a variety of things, and there are overlap between the two, between the different exchanges. There are some differences as well. But what we're actually finding is, despite this effort to standardize and push towards exchange traded volume growth and commoditization, which would see the VCM trade volumes flourish, what we're actually seeing is that actually there's still a lot of demand for standardized products out there. So the chart on the bottom right there shows out of the exchange and platform volume, actually a large chunk of it is still for project specific credits. And that makes commoditization very, very difficult, because essentially you would have to list 1,000 contracts to cover all the different methodologies and the different registries and the different vintages that Steffen highlighted earlier. So, which makes it extremely difficult to commoditize it. It makes it extremely difficult to build liquidity, lower transaction costs, and actually provide transparency, price signals, and risk management options for offsetters and traders around the world. Now, if we delve a little bit deeper into some of those platforms, what we also see is that there's a whole host of different products or credit pools, if you like. Now, there's a lot of overlap in them, but there's also some differences, which makes, from a trading perspective, makes it very difficult. So there is fees and sign-up difficulties with all of these different exchanges, and B, the differences in contract specifications make it very difficult to manage that risk and to trade effectively between platforms, because what you buy on one platform will not necessarily be eligible for a similar type of contract on a different platform. So exchange efforts to standardize have created actually some division in the market, and that division already existed because of the different vintages, the different characteristics, the different projects, the different jurisdictions, the different registries. So those exchange efforts are there to try and standardize, but actually you run the risk of creating more division. Unfortunately, the NGOs and other efforts to standardize have also created yet more division. So we've got a few of the kind of different sectors or companies that cover this market, or initiatives, and there is a lot of different pull in different directions. I think is probably the easiest way to say it. So without one clear direction for this market, There are lots of different ways, lots of different theories, lots of different guidance on how offsetters should use this market. And ultimately, offsetters are at the heartbeat of this market. They are the true underlying demand. Without offsetting, there is no market. So these different initiatives, different contracts, whilst trying to standardize, are actually not necessarily creating standardization, perhaps even yet more division. So in terms of a wish list, and this, as I say, this is purely coming from a trader's perspective, and we're looking at this from the ability of the VCM to flourish and deliver emissions reductions that are required for net zero. And the way to deliver those is essentially a harmonized market that is able to trade and scale. With a market that is able to scale, you will have a much better price discovery. You will have price signals to the projects and the removal projects that are required to meet net zero. So in terms of what you'd look for in a market, and a lot of this thinking is almost comparing to the compliance markets that Steffen touched on earlier, which are generally very liquid markets, especially in the EU. They are a standardized product that is able to trade on exchange very easily. So if the VCM is to grow, you're almost looking for less variety and more standardization to allow trading pools and liquidity to grow. That also allows the spot and futures contracts to flourish, which creates liquidity, it creates price discovery, and it allows for better risk management. Projects are able to hedge forward issuance. Traders and offsetters are able to also manage their risk to the market and forward prices. And with better liquidity, you actually have a better transparency in the market. So offsetters are able to understand and trust what it is they're buying and the kind of price that they should pay for that, much like you would in the oil market or the EUA market or the gas market. They are liquid contracts with very transparent prices. Ideally, you want one or very few contract specifications. And if again, I refer back to the European Union allowance market, the EUA market, it is one product that trades in a very liquid way all day. You'll have 20 million tons trade plus a day in EUAs. And that creates an extremely liquid market. And again, you get the benefits of the above points. And just to put that into some figures, I mean, the value of EUA trade on an annual basis, you're looking at 375 to 400 billion euros versus say 2 billion euros in the VCM market. And there's actually only two platforms that trade EUAs on a liquid basis, one being EEX, as Steffen pointed out earlier. So you don't have to have lots of platforms for things to grow. You need standardization across platforms and the ability for all to trade. And then I think a lot of this also comes down to offsetting. The demand out there needs to decide what it wants. Does it want scale, value, and a pathway to net zero, or the current status quo? So at the moment, a lot of that market, a lot of the VCM market is bespoke, and they're inefficient transactions. They are very costly. The market is opaque. The pricing is opaque. It's very difficult to know what a fair value of a credit is due to the number of characteristics that affect price and demand for that. So I think in terms of offsetters, and with that comes signal and direction from governments or UN guidance that can allow the market to harmonize. Because if the market can harmonize and can gather round a small number of contracts or specifications, then it allows all of those other things to flourish. So with the right signal, the market will effectively deliver the rest. It will be able to push forward. But as Wei Mei mentioned earlier, what we currently have is a patchwork of environmental legislation across not just the Asia Pacific area, it's across the world. And that does not help the global carbon markets flourish. So they're my thoughts from a trader's perspective. Happy to take questions alongside Steffen and Wei Mei. So I'll hand back to Jiling now, and she can direct traffic from here.
Thank you so much, Steffen, Wei-Mei, and Tom. So we have received quite a number of questions, and let's just start with one first from Victoria. So Victoria asked, hi, so if I trade a EEX token, will I get a specific project delivered as a final product? That's a question for Wei-Mei.
So when you buy a so-called token on AirCarbon Exchange, it's basically an electronic warehouse receipt representing an underlying carbon credit. So all these tokens or these electronic warehouse receipts, they are backed one-to-one with a carbon credit. So when you buy these carbon credits on our exchange, you can seek delivery of these carbon credits to your own registry accounts. So if you bought 1,001 carbon credits on our AirCarbon Exchange as tokens or as electronic warehouse receipts, and you request delivery, you would get 1,001 carbon credits in your account. So yes, so you will get the actual carbon credits.
The next question would be for everyone on the panel. How do you think the voluntary and compliance market will be like in the near future? So I guess it's a question on what are your perspectives of the future carbon market? Maybe Steffen can take a stab at it first.
Yes, happy to take this question. Yeah, hard to say. So we see already that voluntary carbon credits are accepted for compliance purposes in different schemes to a certain extent only. Yeah. Then, as I have mentioned before, also in Europe, the public authorities are thinking about using voluntary carbon credits. This is still a discussion point. And I think for us as an exchange operator, if voluntary carbon credits would be accepted also more in public schemes, compliance markets, this would also probably come with a higher level of regulation and standardization, maybe also driven by the public authorities, by the regulators. And this would maybe also help market participants because right now in voluntary carbon markets, they are less regulated, only regulated by private initiatives, what is already working very good. But certain level of regulation is missing compared to other commodities, yeah, from our point of view, yeah. And this makes it difficult for certain players to get active in the market also, and for us also to implement the traded markets on the exchange. Yeah. So be my statement here.
Thank you, Steffen. Wei-Mei or Tom, do you have anything that you would like to add?
Yeah, I mean, just as Steffen observed, I mean, you see a lot of there's a bit of crossover between what is the voluntary carbon as well as compliance market. So increasingly, you see quite a few of the compliance markets. So for example, like South Africa's system, Singapore's system, where you have a compliance system, but then they admit different kinds of carbon credits from the voluntary markets into their systems. But usually they'll put up a barrier that says something like you have to meet this particular requirement or standard in order to come into my compliance market. But having said that, it's like from my perspective and my observations of these markets, it's quite likely that you will have the compliance markets and the voluntary carbon markets sort of coexisting in parallel, plausibly for the short to medium term, possibly even in the long term. They could definitely actually coexist. The compliance markets tend to be, you know, for governments to set a cap or to meet their NDCs under the UN. But as we all know, you know, the countries' NDCs and all their pledges are not enough to get us to where we need to go. So it's quite plausible that the voluntary carbon markets will be where, you know, people pick up the slack in that area. And that's actually the history of the voluntary carbon markets. They grew out of that tradition, and that's why they're there. And it's interesting to see that it's actually the compliance markets which are actually allowing more and more of these voluntary standards to enter into compliance schemes. So I think they're going to exist in parallel. And actually, I'm gonna take one question which I'm looking at because I'm really interested in it. It says, do you think in future we'll have a regulator for carbon credits? It's not regulated by countries. I'm very happy to say that AirCarbon is actually the world's first regulated carbon exchange, where we receive our licenses from the ADGM in the UAE. So we are actually going to be, we are actually the first fully licensed carbon exchange in the UAE.
Oh, so there's this question from an anonymous attendee. Where do you think voluntary carbon credit prices are going in the near future?
I mean, in terms of the near future, they've obviously they have come down a lot from the perhaps exuberance we saw in the previous 12 months or so. I think a lot of those carbon credit prices have not really got a lot much further they can fall. That said, there is a lot of issuance coming through still after a lot of delays around COVID and backlogs at the various standards. So we are seeing a lot of issuance coming through, but I think they get to a point, and we saw this a few years back, where actually project developers start holding back issuance. They don't bother paying the issuance fees because the secondary market prices are low, and there's little incentive to pay that. So I think, given all the market turmoil that we are seeing globally, I think the chances of a really strong rebound anytime soon are probably fairly low. But over time, I do think prices will pick back up. I think the VCM, if it can grow and flourish, there is a lot of opportunity in there to make this a huge market. There is enormous potential in the VCM. Is the VCM reaching its potential currently? No, I don't think it is. But is there the potential there to become the world's largest market? Possibly, yes. Certainly in terms of commodities, I think in the years to come that could easily happen. But there is a lot of work to do in the meantime.
So hi.
Sorry.
Hi. So a bit of a technology glitch there. So just a quick question here is, how can digital asset companies work with blockchain-based exchanges such as ACX in trying to streamline the whole ESG footprint on digital assets? Is there a current program that you're running, or something that we can do in this space to build better collaborations?
Of course, we are happy to collaborate, and we have an ecosystem of partners to help companies who are looking to offset their carbon footprint. So if you need somebody to help you do the audits, if you need somebody to help certify you carbon neutral or in compliance with some other standards, let us know. We can advise you on the appropriate grade of credits to obtain, and then you can get yourself certified. And then I'm not very sure how blockchain plays into this, but AirCarbon is a blockchain-based exchange. So we use that for tracking a lot of the credits and how they trade when they trade at high velocity on our exchange. But we're always happy to talk about collaborations. Just feel free to email us, and we'd be happy to speak.
Sounds good. Thank you.